You worked hard. You gave up family moments, small luxuries, and often even basic needs. All of it believing that, by investing wisely, you'd secure a better future for your children. And when you started seeing your money grow, you felt a little spark of pride, didn't you? But now, with SCHD dropping, the fear has come back. You open your brokerage app and see the value going down day after day. That anxiety hits your chest, like everything is falling apart. Did I mess up? You wonder. Calm down. Stay with me until the end of this video because we're going to break down, step by step, what's really happening with SCHD in 2025, and most importantly, what you, as a parent, should do now. And if this content helps you see things more clearly, hit the like button down below and subscribe to the channel, because every week we bring real information to those who want to get out of debt and build true financial freedom. SCHD became famous in recent years for being one of the most solid and reliable dividend funds in the US market. It was the kind of investment that seemed perfect for those who wanted to sleep peacefully without having to check charts all the time. But in 2025, everything changed. The drop started subtly, and many people thought it was just normal market fluctuation. But time went by and things got serious. So why exactly is SCHD falling? The answer lies in the gears of the economy. SCHD is made up of large US companies, many of them known for consistently paying good dividends, like Coca-Cola, Verizon, Merck, PepsiCo. But even these giants are facing a tougher reality. High interest rates, persistent inflation, and consumers spending less. The result? Lower profits and, with that, falling stock prices. And since SCHD is a fund based on these stocks, it naturally follows that same downward path. So if this is making you worried, go ahead and share this video with someone in your family who's also investing, because the right information at the right time can help avoid a much bigger loss. But maybe the most important question right now isn't, why did it fall? It's, what do I do now? Seeing the fund tank, many beginner investors panic. They start selling at a loss, driven by fear. And that's where the biggest mistake happens. Because when you sell at rock bottom, you're not just locking in your loss. You're also missing the chance to ride the recovery. Remember 2020, when everything dropped because of the pandemic. Those who held on to good assets saw them bounce back, and even gain more value than before. The truth is, the market is cyclical. It goes up and down. The problem is most people buy when they're excited and sell when they're scared. But people who build real wealth do the opposite. They buy when everyone else is afraid, and reap the rewards when the cycle turns. If this kind of insight is opening your mind, comment down below, I won't sell out of fear, just so I know you're with me on this journey. Of course, whether to hold or sell depends on your personal situation. If you invested in SCHD without understanding what it was, just because someone recommended it, maybe it's time to stop and study. But if you knew you were investing in a fund of large companies, with a history of good dividends and a long-term focus, this drop might actually be an opportunity. You know that famous Warren Buffett quote? Be fearful when others are greedy and greedy when others are fearful. That's exactly what top investors are doing right now. They're buying more SCHD, because they know the value of these companies is still there, and that when the tide turns, those with patience and vision will be way ahead. So, if this content is making sense to you, don't forget to like and subscribe to the channel. Your subscription is what keeps this content coming to the people who need it most. Now imagine you're in a car with your family, driving on a road covered in heavy fog. You can't see more than a few meters ahead. It's terrifying. But you have two options. Pull over and wait, or keep going slowly, cautiously, but believing the road is still there. Investing is the same thing. Sometimes the visibility disappears. Fear shouts at you. But those who keep going, even afraid, get much farther than those who stop at the first scare. SCHD hasn't stopped being a fund with strong companies. It's just going through a curve in the road. And if you don't let fear take over, you can come out of this stronger than ever. In fact, if you've made it this far in the video, it means you take your family's future seriously. So do this. Write down in the comments what your biggest doubt about investing in 2025 is, and I might make a whole video just to explain that. Now, let's talk about something very important, your financial situation today. Many parents are investing even while in debt. And that can be dangerous. Because if you need the money in the short term, seeing SCHD drop might force you to sell at a loss. But if you have an emergency cushion, got organized, and this money is there to grow in the long term, the story changes. In that case, the drop is just a temporary challenge. That's why, before deciding whether to sell or buy more, look at your budget. Are you paying interest on your credit card? Do you have overdue bills? Maybe the best thing right now is to rebalance first. But if everything is in order and you have a long-term vision, this might be the time to reinforce your position. And here's an important reminder. Investing is not about emotion. It's about strategy. So if this video is helping you think more clearly, hit the like button and subscribe, because this channel is for you, for those who want to stop going in circles and start building a real path. SCHD is not just an index fund. For many parents, it represents a silent promise of stability, a way to keep money moving, but with safety. But understanding what it truly represents is the first step to knowing whether you should sell or hold. SCHD is made up of mature, established, and profitable companies. These are businesses that, even when everything seems to fall apart, keep operating, paying dividends, and generating cash. So when this fund starts to drop, it's not because it became a bad investment. It's because even the pillars of the economy shake during turbulent times. And those who understand SCHD's role in their portfolio know it's not there for quick profits, it's for consistent growth. If this is already helping you see things differently, hit the like button and subscribe. This series was made to guide you through the toughest times. A lot of people start investing with the dream of getting rich quickly. And when they see a fund like SCHD fall, they think they've failed. But the problem isn't the fund, it's the expectation they created. This is the same pattern that feeds the cycle of financial pain. You enter with hope and give up after the first stumble. And this doesn't just happen with SCHD, it happens with real estate, with businesses, with life. People in debt tend to seek urgent solutions. But true wealth is a marathon, not a 100-meter sprint. When you understand that you're building something for 10, 15, 20 years from now, today's fear feels smaller. So share this video with someone who keeps jumping from one investment to another. Maybe they need to hear this more than you do. One of the main reasons for SCHD's drop in 2025 lies in the Federal Reserve's decisions. When interest rates rise, money becomes more expensive, credit harder to get, and consumption slows down. And that directly affects the companies that make up SCHD. After all, if Verizon or PepsiCo sell less, their profits fall. And with that, their stock prices too. The problem is that many investors don't connect the dots. They think the fund is broken, when in reality, it's just adjusting to a new scenario. And here's the key: interest rates go up, but then they come down. The economy breathes again. And those who held their position during the cycle reap the rewards. Are you enjoying this deeper explanation? Then you know what to do. Like the video and subscribe to the channel, because here, we treat you like a real investor. Before making any emotional decision, ask yourself, why did I choose SCHD? Was it a recommendation, a trend, or because I understood its purpose? SCHD is designed for dividend generation. That means its greatest value isn't in rising in price, like a speculative stock, but in regularly paying profits to its shareholders. And even during a downturn, many of those dividends are still being paid. Evaluating whether the fund still suits you requires looking at your strategy, your time horizon, your risk profile. Don't copy anyone. Invest consciously. And if this chapter helped you reflect better, leave a comment. My investment has a purpose. A lot of people start investing before organizing their finances. And that's like building a house on a cracked foundation. It looks good in the beginning, but any storm knocks it down. Those with bad credit, no emergency savings, or paying sky-high interest on credit cards shouldn't be worried about SCHD's price, but rather about restructuring their finances. Investing is wonderful, but investing without a foundation is dangerous. You might be trading 15% monthly debt for a fund that pays 3% a year. And that doesn't make sense. The first investment every parent should make is stability. Then comes growth. If this made you realize something, send this video to someone in your family who needs to hear it right now. Did you know that even when it's down, SCHD could still be making you richer? It sounds strange, but it's true. When you reinvest the dividends you receive, especially during a downturn, when shares are cheaper, you buy more units of the fund. That means that when it goes back up, you'll have more of it. That's the power of compound interest applied to dividends. It's the snowball effect. Slowly, month by month, year by year, until it becomes an avalanche of passive income. But this avalanche only happens for those who have patience. For those who don't sell at the first drop. If that lit a spark inside you, comment, "I'll live off dividends someday." Fear protects. It's a natural reaction. But in the world of investing, it's also the greatest enemy. Because fear makes you sell at the bottom. It makes you abandon a strategy halfway through. And it makes you forget why you started. In 2025, fear took over many investors. But those who stay strong aren't brave, they're disciplined. They have a strategy. They know today's pain is temporary. And you can be like that too. If you feel like you need more emotional clarity in investing, this channel was made for you. Subscribe now, hit the bell, and stick with us. Nothing in the economy is static. Everything is cyclical. There are moments of growth, optimism, consumption, and moments of tightening, fear, and contraction. SCHD is not immune to that. It's affected by every phase of the American economy. The secret is to understand the cycle we're in and not fight against it. In 2025, we're in a transition phase. High interest rates, inflation being fought, profits being squeezed. But this will pass. And those who know the cycles prepare the ground during the low to harvest during the high. Are you learning from this content? Then like the video and share it with someone just starting out in this world. Even when falling, a dividend fund can still be healthy. The secret is to look at the payout, the regularity of payments, the portfolio composition, and the earnings growth of the invested companies. SCHD, for example, continues to deliver consistent dividends. That indicates its foundation remains solid. But those who look only at the share price ignore this. So, learn to analyze beyond the price. Look at the value. And if you want me to make a video just teaching how to analyze dividends, comment here, "I want to learn how to analyze dividends." Volatility is when the price swings. Real risk is when the asset loses value because the business behind it is falling apart. SCHD is volatile, but it's not in collapse. The companies still exist. They still produce. They still pay dividends. But many people confuse the two and sell in a panic. Understanding this difference can save you years of frustration. And it can be the difference between giving up or achieving financial freedom. If you understood this concept, hit the like button. It shows you're evolving as an investor. If SCHD represents stability and passive income, maybe it should be the core of your strategy. But it can't be the only pillar. Your plan needs to include an emergency fund, diversification, and a horizon of at least 5 years. Only then can it work as intended. The problem is not the fund. It's how it fits into your life. If you want me to create a video teaching how to build this complete plan, comment here, "I want my financial plan." If you were a big investor right now, with knowledge, discipline, and patience, what would you do in the face of SCHD's drop? Most likely, you'd be buying more. You'd be looking toward 2027, 2030, not the end of the month. You'd be reinforcing your position, not abandoning the ship. You don't have to be a millionaire to think like one. You just need vision. And that's what this channel wants to build with you. So if this content gave you a more strategic perspective, share it with someone who also feels lost. Subscribe to the channel now, because here, we don't just invest money. We invest hope, awareness, and transformation. To close, I want to tell you something from the heart. You're not dumb, and you're not late. You're someone who had the courage to take the first step. But the road to financial freedom is long, full of curves, fog, and potholes. And what will get you to the end isn't luck. It's consistency. It's knowledge. It's choosing to keep going even when quitting seems easier. SCHD is falling, yes. But that doesn't define your success. What defines it is what you do with that information. Will you panic? Or will you use it as a lesson and move forward? If this video helped you see things more clearly, share it with someone you love. Send it to that friend or family member who's scared, thinking about selling everything. Together, we go further. Subscribe to the channel, hit the bell, and stay with us. Because the next video might be exactly what you need to take the next step. Your turning point starts now.